In this video we are going to talk about dividend stocks to buy now. So before starting this video, please like this video and subscribe to this channel for our future updates. Companies that distribute dividends to their shareholders on a consistent basis are considered dividend stocks. These companies pay out a percentage of their earnings to a specific category of shareholders. These businesses typically have a strong track record, a consistent history of returning a portion of their profits to shareholders, and reliable earnings. In addition, these businesses typically have a solid foundation. The payments made to shareholders are known as dividends, and they can either be made in the form of cash or more shares of stock. The vast majority of dividends are distributed on a quarterly basis, however, certain payments are distributed on a monthly, annual, or even one-time basis in the form of special dividends. Although dividend stocks are well known for the consistency of their dividend payments, in times of economic stress, those distributions may be reduced in order to maintain the company's financial position. AbbVie. There should be no doubt about it, AbbVie is the king. To be more specific, the pharmaceutical company is a dividend king since it has increased its dividends for the past 50 years in a row. This royal family member is also highly generous, as seen by the fact that its dividend yield currently exceeds 3.8%. As the year 2022 has progressed thus far, AbbVie has been a consistent winner. The stock has increased by about 10%, handily outperforming the major market indices in the process. And AbbVie seems to have a bright future ahead of it as well. You might even make the case that the corporation is on its way to become the dominant player in the world of big pharmaceuticals. It's possible that market researcher Evaluate Pharma would agree with you. On the basis of overall sales of prescription drugs, it is anticipated that AbbVie will be the most successful pharmaceutical company in the world in the year 2028. When taking into account the fact that AbbVie's best-selling medication Humira will lose its exclusivity status in the United States in 2019, this projection may appear to be questionable. On the other hand, the business anticipates that its more recent treatments for autoimmune diseases, Rinvoq and Skyrizi, will collectively achieve peak sales that are even higher than Humira's revenues. In addition, AbbVie's range includes a number of other growth drivers. Among these are the antipsychotic drug Vraylar, the migraine medications Qulipta and Ubrelvy, and the drug Venclexta, which treats blood cancer. Novartis. Veteran dividend investors are aware that even if a company has a low payout ratio and a high dividend yield, these factors are meaningless unless they are supported by a stable company. The pharmaceutical powerhouse Novartis, fortunately, provides all three of those options. The pharmaceutical company presently has a dividend yield of about 3.7%, which is significantly higher than the average dividend yield of the S&P Wink with tongue sticking out 500, which is 1.4%. The payout ratio for Novartis is 31%, which is far lower than the 60% that is normally considered to be a healthy number. This indicates that there is lots of space for future dividend rises. In addition, Novartis benefits from a significant edge that it, along with other pharmaceutical companies, shares. The majority of people do not regard medicines that save lives to be examples of luxury things. Patients are not likely to reduce their dosages of the medications they require to maintain their health, even in the midst of economic downturns. In this regard, Novartis has a lot of different options available. Cosentyx, an immunosuppressant, Entresto, a treatment for heart failure, Xolair, a therapy for asthma, and Zolgensma, a therapeutic for gene editing, are just some of the products that the company offers. The first quarter net sales for Novartis came in at $12.4 billion, representing a year-over-year increase of 1% or 5% when adjusted for currency fluctuations. The pharmaceutical company's net income increased to $2.1 billion, representing an increase of 8% year-over-year and 15% when measured in terms of constant currency. It is absolutely necessary for a pharmaceutical company to maintain a robust pipeline in order to broaden its product offering and mitigate the financial impact of patent cliffs. Even in this sphere, Novartis shines brightly. More than 150 different programs are currently being tested in clinical settings at the organization. This comprises a total of 52 active clinical studies in Phase 3. Even if its late-stage studies only have a moderate success rate of 25%, Novartis should still be able to gain new brand approvals or label expansions on a regular basis. During the first quarter, the company announced that it had received 3 regulatory approvals. It is likely that Novartis' sales and profits will continue to rise for a considerable amount of time, particularly as the company continues to reap the benefits of tailwinds such as an older population and an increased demand for pharmaceuticals. Viatris. The investment opportunity presented by Viatris is very noteworthy. The pharmaceutical manufacturer Mylan and the healthcare provider Pfizer's Upjohn business merged together to form the relatively new healthcare company in the year 2020. Already, there are some promising signs emerging from testing using Viatris. In May, the company announced profitable financial results for the first quarter of the year. The net income for the first quarter was a total of $399.2 million. Despite this, Viatris reported revenue of $4.2 billion, which is a loss of 5% year-over-year. It's not a bad result by any stretch of the imagination, especially considering the macroeconomic headwinds that businesses are currently facing, such as problems with supply chains and rising inflation. The number of free cash flows should be given more consideration by income investors. Free cash flow for the first quarter came in at $1.1 billion for Viatris, an increase of 34% year-over-year. That is far more than sufficient to fund the company's quarterly dividend payments, which come to over $150 million. In addition, Viatris revealed earlier this year that it will be selling its biosimilars portfolio for a price greater than $3.3 billion in order to offer more financial flexibility to the company. The accumulation of additional wealth is music to the ears of income investors. The dividend was increased to 12 cents, a yearly increase of 1 cent, by the corporation earlier this year. Even while it might appear insignificant, this rise actually represents a 9.1% increase. Investors who purchase the stock at the current price will receive a yield of approximately 4% on their investment. Because Viatris has a healthy cash flow, there is a good chance that there will be additional rate increases in the near future. Purchasing the stock at this moment can prove to be a wise decision. At the moment, a forward price-to-earnings multiple of less than 4 can be purchased for Viatris stock. When compared to the 16 times anticipated profits that are traded for by the average healthcare stock in the Healthcare Select Sector SPDR fund, that is a ridiculously low price. If you are someone who enjoys receiving dividends, then I believe that Viatris is a stock that you should think about adding to your portfolio right away. Lumen Technologies Incorporated, LUMN. Lumen Technologies is a global technology and communications company that caters to both individual customers and commercial enterprises all over the world. It provides an integrated platform that brings together network assets, cloud connection, security solutions, as well as voice and collaboration capabilities, with the goal of assisting organizations in utilizing their data and adopting next-generation technology. Late in the month of March, the organization made public its decision to select Chris Stansberry for the position of Chief Financial Officer, CFO. Most recently, Stansberry held the position of Senior Vice President and Chief Financial Officer at Arrow Electronics Incorporated, where he was accountable for overseeing the company's operations across all of its global finance departments. New Residential Investment Corporation, NRZ. The mortgage and financial services businesses benefit from the funds and services offered by New Residential Investment, which is a real estate investment trust, REIT. The corporation makes investments in assets that generate consistent cash flows over the long term. Its investment portfolio consists of a variety of connected investments, such as residential mortgage loans, real estate securities, mortgage servicing-related assets, and other associated investments. OneMain Holdings Incorporated, OMF. OneMain Holdings is a holding company that specializes in financial services. It provides a variety of financial products, such as credit card products, personal loan products, and optional credit insurance, among other financial products. In addition to this, it looks for opportunities to make strategic purchases, such as loan portfolios or other sorts of financial assets. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.